ericmother for early morning, January 17th, 2018. Take a look at the crypto space here, and we are looking at a live stream. And we are looking here at instruments that are down way more than 50% after they had a strong close to 2017. So really, this is not a surprise, because if you've been trading in the market for a while, you know that after an instrument has seen an explosive run, the other side of an explosive run is an implosion. So really no surprise. So one thing about how instruments trade is you have to appreciate the fact that on the way up, and we're going to use the daily chart for Ethereum, for Ripple, you can see on the way up tends to be some type of a staircase type of action. This is how it tends to happen on the way up. But on the way down, you get this type of quick reaction. In other words, the way people on Wall Street look at this is you take the staircase up and take the elevator down, which is another reason why it's always good practice to be booking profits along the way, because once it pops, the pop can happen anytime, and it can be swift and catch you by surprise expecting it to stabilize. But you have to always understand that on the other side of a staircase bullish run is an elevator move down. Which also means, if we take a look at the general market in the US, actually worldwide, since about 2009, the market's been on a very strong run. So we can also anticipate the same type of reactionary trade once this bull market in the general market also starts popping. Of course, the $1 million question is, where does it stop? Now, if you take a look at a long-term picture for the SPX, we are trading at all-time highs, and I've been trading at all-time highs for quite a while. So the question is, at some point when this pops, you can expect a huge staircase inverse reaction. For example, here from 03 to 07, we took the staircase, but in 08, we took the elevator down. So the reason why it makes sense to take profits even in the current market is, if you take a look at this 2-year weekly chart for the SPX, you can see the elevator type action, or the staircase, and at some point you can for sure bet that there's gonna be an elevator inverse reaction. We are gonna be taking a huge speedy drop. Why? Because the other side of a staircase bull market is an elevator movement down, just like we've seen with the cryptocurrency space. So for example, if you take a look at Bitcoin, just about a month or so ago, it was trading at 20,000 or close to 20,000, just under 20,000. Now it's back below 10,000. And even though it might seem like this is where you want to buy it, hand over fist, the problem with a pullback from a bubble bust is sometimes these things, not sometimes actually, it takes a while for things to settle down, for the instruments to find a new equilibrium. So it's very tough to find the low. So rather than going in there and trying to predict the low, best thing is to wait for the charts to tell you. And the best way to do that is be patient, wait for the charts themselves to turn. Once the charts and the technical parameters turn around, then that is the only time you can start nibbling. But frankly, when something is on the way down, you don't want to try and catch a falling knife. ericmother.com. As always, good luck, peace, and blessings. Remember, you take the staircase up and the elevator down. I am out. E-A-C-S. Mwah. Woo! Are you still there? Well, so am I. Just watching here, recording this as we see the main crypto, the bellwether one, crash pretty much to new intraday lows. So again, you don't want to catch a falling knife. Let it settle. You'd rather miss the bottom and buy it on the way back up at some point. And remember, in a different video, I mentioned the fact that sometimes it can take up to 1 to 2 to 3 years before the next buying opportunity after a massive sell-off. So again, it might be, if we don't find a bottom here pretty quick, the next opportunity for momentum might come even more than 3 years down the road. And the reason is that sometimes it takes 2 to 3 years for things to stabilize before you can get momentum back in an instrument that has crashed. Oh, and by the way, one more thing in terms of how much lower we can go now. I'm going to include a link in the description of the video where I was discussing this possibility of what we are seeing happening. And so one thing, we can actually even just do some math. And if we take a look at Bitcoin, and let's say we take the highs, and let's just say the highs just close to 20,000. Let's just use 20,000, right? And what you see, so let's take 20,000. Let's multiply that by 0.382, which gives us potential price target for Bitcoin off the highs of 20,000. And the reason for that is that would be the correction I was talking about of 61.8% off the highs just under 20,000. So this would be a logical area for where the target is short term in terms of price, because that would be 61% correction or 62% correction off the highs. So that would make sense. Right now we are looking at about, let's say, a 50% correction, a little bit more than that, which is actually not that bad. If this is truly the beginning or the journey to a bear market in the crypto space, huge bear market, the other side of a hyperbolic move, then don't be surprised to see an 80% correction. Maybe even 90%. This is typical of major bubble busts in any trading sector or instrument. Now that seems fantastic, but if you think about it, if we do the math again, let's take out 20,000, multiply that by 0.20, we are talking about Bitcoin in an 80% correction might be looking at a target of 4,000. Now those are scary numbers, but those are the numbers. So it needs to find stability pretty quick. Otherwise, right now, if it doesn't hold the 50% area, the next logical target is going to be 61.8. And if the 61.8 correction does not hold, the next level would be 80.9% drop from the highs. So we already got the 50. If that holds, that's good. If it doesn't hold, the next target is a 61.8 correction, which would bring it to about 74,000. The next target, if this doesn't hold, 80% correction, 80.9%, which would bring it to about 4,000. So those are the numbers. We'll see how it goes. Now, recall that when Ethereum was trading at about, let's see here, 1336, I issued an alert. In fact, I was telling my paid subscribers to be very careful that this was setting up for possibility. Of course, I did not know, let's be honest, but I could see on the charts that things were turning around, and I gave them a warning. I was telling them, be very careful with the cryptocurrency sector, since the bubble might have already burst. And the last thing you want to be involved with is a market that could be already collapsing. So this was on January 10th. Of course, as of right now, since the price of Ethereum at 1336, we can see it's really come down substantially. So this big drop is no surprise. And remember, this is not based on fundamental analysis. This is based on reading the charts only. So nobody's opinion is involved. No type of, looking at the news, just looking at the chart. So since then, since the 10th, we can see Ethereum has gone all the way to about lows here of 790, 780 as of right now. That's a huge drop since the 10th, today being the 17th. So in about, 7 trading sessions, Ethereum has lost close to 40% in about 7 days. So the warning pretty much was based on the fact that I was looking at the charts and things did not look good. So pretty much makes sense to make sure we always understand what the technical picture looks like, because we can avoid some of this pain just by understanding the charts and staying away from the news, staying away from opinions that we hear from all types of sources out there. Oh, and by the way, I'm going to include a link to the software that I'm using here to stream this live quotes. So if you want to get the same type of capability on your machine, I'm going to include a link for this streaming software. EricMuadethMuadeth.com. As always, good luck, peace, and blessings. E-A-C-S. Mwah. Woo! Woo!